The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 20th day of January. Change of presidency, we'll see what happens, and we're looking at a Dow that's up 98 at 19,830. S&P's up 10. They were not in sync earlier on. They were not in sync yesterday. Today they're in sync. Dow's up 0.50%, S&P's up 0.46%. I actually like it when it's reversed. I like the S&P 500 to be a little stronger than the Dow. So I'm going to watch this closely. I do have a signal to say, I'm not sure if it's options expiration influence. Really, has it been? It was for 2 Fridays in a row a few years ago where there was a really low reading in the VIX index, and it was really based only on options expiration, but most of the time it isn't. And my thinking here is that this is suggesting that Monday, at the opening, there should be some weakness. That's all it says, that there should be some negative no matter where the futures are. Earlier on the Sunday night before, on Monday, there should be, there should be some kind of, let me get that again, some kind of a pullback to negative. That's very interesting because with the low in the Dow of the 6,450 area, I think it was, the S&P was 666. We are trading right now at 19,833, 13,000 points higher in the Dow, and what is it, 1,800 points high? Yep, 1,800 points higher in the S&P. Can the next administration over 4 or 8 years, whatever it is, have an influence that takes the Dow 20, 30, 40% higher? Now at this particular point, unless there are incredibly dramatic changes, I would suggest to you that we've got to look for a more modest up move, but at the same time, there is talk about this being Reagan-esque. Don't forget that for Reagan, with Reagan, you had a huge decline. And then when he came into office, it took a while. And then in August of 1982, no, July of 1982, I got a major buy signal, but it was only in August that the market really broke out. So there are a lot of differences. However, what is going to be very interesting is what are the enunciations? What does Trump suggest? And what does the market do? How does it respond? Rather than say, oh, financials, cyclicals, dollar, I'm just going to suggest to you that within the context, Reagan, Obama, and Clinton, all from low valuations, correct. Do that in the den, absolutely correct. So this is very different. I think it's going to be very selective. I think this rotation that we're seeing right now is suggesting that there are going to be expectations that need to be met. And we might see some, at least short-term consolidation in areas that were very strong going into this. As long as there's a rotation going on, we can consider that there's a higher level consolidation going in, at this moment. For us, for my subscribers, we actually went long a couple of positions today. I liked what I saw technically. I thought to myself, I've just got to look at it as if I don't care what's happening. That's what the technicals are saying. We'll see what happens. So far, both of them up a little bit from where we bought, and that's good. Okay, let's go to the nitty-gritties here. The E-mini is up 875. You see, the E-mini is not as strong as the general market. These are the futures. But it has broken the downtrend line. But this is just a one-bar situation. So I'm looking at it and I'm saying, make it real simple. 2273, round number high, was the high of the 6th, was it? The 13th of January, 13th of December. We retested it by breaking above it. That was to another round number high, 2277. That was on the 6th of January. And what we're looking at here is a situation where the weekly chart will make a peak, a very modest peak, if there's no new break above 2277.00 today. Just make it as simple as that. All right. So the support level is at 2253, and the breakout starts to go at 2278, starts to break out to new all-time highs. Let's go run the numbers now. INDU. We're looking at the Dow within this framework. If I can, I'm just going to show this technical Friday, so we will be technical. Remember the 120-minute chart yesterday? I spoke about it possibly going to a leg 5, Chapman wave 5. It did that spectacular break to the upside from that low of 19,677. The high today is already 19,843, almost 200 points higher. And this I'm going to call a 1. I'm anticipating that unlike here where I put an X, expecting lower lows and lower highs, I think we're going to chop around with slightly higher highs and higher lows. I don't know if this is the move that takes 20,000 out, but I wouldn't be surprised if we go 1, 2 down, 3 up towards the 19,870s, maybe 50s, pull back, and then have a 5. And that 5 is going to be the most important 5 that we've had in a long time, and that'll be next week. In the 120-minute chart on the right here with the MACD turning up, the histogram improving, stochastic going from under 20% to over 20%, way above the 9-period moving average. This is a good leg A, and I'm going to call it a gray leg A to the upside, and that's all I can do. Now what we're looking at is that resistance level in the down channel inside track repellent zone can take you to 19,876. Go to the 19,900s. It's essentially a breakout. Just keep it as simple as possible. And here we're looking at the daily chart that says the M-shaped pattern just has continued within a kind of a rectangle formation. We went to a slightly lower low, 19,677. But I have to say that the MACD, for the first time, is just starting to show a little bit of a positive sign, flattening out, but it's still a negative MACD. The stochastic hasn't crossed positive. Very interesting session. We'll see where we close because the 9-period moving average right there has been very strong resistance. Let's go back to our nitty-gritties. And what we're looking at the S&P. Let's do this quickly. SPX.X. There's a lot I want to do today. Breaking the resistance level, but really, unless the S&P can take out 228.10, close nicely above it. If it does that, I probably will have to call that new leg B to the upside and a leg C if it does it today in the weekly chart. Strong support in the 2257s. And let's go to the QQQ series. Let's take, oh, look at that. Up 39 sets of 1, 2, 3, 3, 7. Remember yesterday I said techniques that I was teaching in my 3 webinar series that are how you can use the channel lines and the trend lines. Remember, there's a difference between a channel line when you have 2 lines that are parallel. Trend line is just one single line. It could be a support and resistance at the same time. And here we are. We're in the inside track repellent zone. I'm suspecting that there's a little bit of pressure now in the NASDAQ. Oh, we'll get back and we'll finish up with some more of the technicals. And a question about bonds. I'll do it all when we get back. There's no rush. End of the week, beginning of a new administration. Plenty of time. I'll be right back straight off these messages. Dow's up 100 points. It's a piece of 10.5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Everyone, we're back. Let's go on. IWM was the Russell 2000. Still stuck. I mean, the IWM has not really plummeted by all that much, 4 points, but it's made a peak C1, peak C2, C3, and has pulled back within this down channel within the Chapman Wave inside track support level. Hasn't broken it. It'll break it if it goes under 132.50. It's at 134.53, up 79 cents. But that 9-period moving average at 135 is very strong resistance. And this weekly chart suggests to me that we could be in for a little longer consolidation. Monthly charts still look spectacular. Weekly chart is trying to bounce here. And we're going to see, and I'll just make it real simple. If the IWM, the Russell 2000 ETF, iShares, breaks 137.50 to 138 resistance anytime in the next 2 weeks without taking out the 132 most important low, I would suggest to you that it's consolidated and it's ready to break out to the upside. And that upside says you're going to go for the next trend line resistance, which is up in the monthly chart, somewhere at the 141 level. I do think that has to wait. This is the way I'm looking at things right now. Just kind of preparing, getting some positions in that I think have potential. One's a kind of I wouldn't call it fundamental. It's more a trend that I think is unfolding. Another is a stock that's been just a magnificent stock for so long that I think it's still in that category of acting very well, etc. We do have the GE still, even though GE got clobbered because of earnings today. Where is GE? GE down. I'll go through those in a moment. Let me just finish what I want you to do. So this is the NYA.X. This is the New York Stock Exchange. You see, this is the Chapman Wave falling axe. So many charts have this formation. Remember in the webinar, I said I was going to talk about certain techniques, certain patterns that we're going to be looking for. One was the falling axe. This is the wedge-shaped pattern. You go to a high, and then you make lower lows and much lower highs and much lower lows. And then at a certain point, it stops and it makes a cup or a V-shaped formation. Very important pattern. We're seeing it all over the show. Here's another thing that we're looking at, how the MACD and stochastic have been pulling back in so many of the technicals in so many of the charts, and yet the price is held very nicely. What does that mean? What is the implication? And things like that. So now let's go on. I want you to look at a gold, GC. Oh, incidentally, New York Stock Exchange hasn't broken out yet. Holding well, but hasn't broken out. Gold is at down. It's about unshot 12.012. Let me double check here. Gold is down. Yeah, it's down about unch to minus 60 cents or something like that. Holding the 9-period moving average. The MACD is still strong. Stochastic's at 86%. It's that weekly chart. Is this going to be a single leg A failure? I don't think so. Not by the way gold is acting, not by the way the GDX, which is up, it's unchanged now, 22.88. It still has to make a leg D. I'm watching this all very closely because the dollar is really going to be a big benchmark. My contention is that looking out over the next year, there's a chance, and I'm just saying that there's just a chance that the dollar rallies as our exports increase. That's what happened in Japan in the 1980s as the yen increased, and Toyota and all those fantastic Sony products, you remember, were amazing. And they were just fantastic. You could pick any Sony product, and it was just breakthrough revolutionary technology and worked like a charm. And they kept miniaturizing. I remember having this professional grade cassette recorder, little miniature thing. It was absolutely amazing. All right, so let's get back to the nitty-gritty. So the dollar right now is down 7 cents at 101.08. This is very important, and I'll make it real clear. A close, I'd have to say 2 closes out of 3 over a period of a week or a week and a half with the dollar under 100, closing under 100. I might have to change my mind. It might be a longer timeout that I'm looking at. And how that affects the gold is going to be very important. Let me just get back to that. Gold right now, as I say, about unch at 12.02. What's really important is gold is holding well. It's made a peak E, but that's the only one. If you look at the GLD, I wonder if I updated that. The GLD has made a peak D. So one is E, one is D with a doji candle holding very nicely the gold. This is the Spider Gold Trust. Now, what's really important about this, a number of the gold stocks have had spectacular moves because they've come from very low bases, single digits in many cases. So percentage-wise, it's a big move. If you look at the spill that they've had from the high that they made last year to the decline this year, that's a big percentage. So the percentage move to the upside is big, but the move down was actually quite sharp as well. Now I'd like to just do this high-grade copper. High-grade copper right now is at 2.63, made a peak C. I think it's still going to make a D, and it's starting to hug the 200-period moving average in the weekly chart, 2.68. I just think this is a big chop, chop, chop area, so I'm going to put it in a big rectangle right here and say copper's in a range. And I think it's going to stay in that range for a little longer, but it's holding very well at a higher level consolidation towards the lower end of the monthly chart formation. All right. Now let's go to platinum. I just wanted to add that today. Platinum has had another single leg move up in the weekly chart. Monthly chart is not too bad. It's trying to break above the 9-period moving average. The daily chart has gone to a peak E, a nice candle today because the MACD didn't quite finish its work. So at 976 up 20 points. I'm saying that the 992 level at the 9-period moving, 200-period moving average is going to be very important resistance, and between 970 and 964 is really the containment area that it has to hold. Let's go to crude oil. Crude oil right now is up $1.37, up 53.49. I think that's also the reason why the Dow was doing nicely, because the crude ExxonMobil in the Dow got clobbered the other day, but Chevron was holding much better. Remember, I've been for about a couple of months, I've been saying I think Chevron is holding way better than Exxon. I think that's more the dividend play. I wouldn't use Exxon as a dividend play. So now you've got crude oil up $1.36 at 53.58. I just think that it's stuck in the range. Look, 200-period moving average, that orange line, beautiful support. MACD's trying to turn up, but it's not up yet. And the stochastic is still not great. So I just think it's stuck. I'm going to extend this rectangle formation. Just stuck between the 55s and the 51s, maybe even 50. At some point, it will make a leg D up above 56.36 in the crude oil continuous contract. Let's go to bonds. Yep, we've all been waiting for that. Bonds. And looking at the peak C sharp pullback, I said I didn't like the steepness of the pullback. It shouldn't have done what it did yesterday. And today's continuing that move. It's giving back that leg A in the weekly chart. And I can't go to it right now. I'll try to do that during the break. No, this is my chart that says the E-mini has 2271.25. Very strong resistance is trading right now at 227. 223.0. That's the cash. 2269. So I'm really watching. I wouldn't be surprised if it pulls back some, and then we'll see what happens later this afternoon. So that's the chart I was going to use, this chart space I was going to use. Can't do that now. Let me go to the yield TYX, because that was the question that I was asked in the email. Yeah, very strong leg B. And if you don't mind, I'm going to use this in correlation with the TBT. Remember, I spent some time, I think it was yesterday, talking about the TLT. Let me do it again. Look, TLT, TBT, inverse. And this is in a leg B, and I put a gray B. I said it's got to break this down channel inside track resistance, and today it's above it. This is very important because it's saying what I've been talking about for a while, that I think there's a high-level consolidation in yields, how it impacts the housing market and some of the interest rate-sensitive areas is going to be very important. I think we'll talk about that when we get back. Basil Chapman, Tiger Technicians Hour. Dow's down 94. Up 94.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So within the context of the E-mini, the 2272.75 was like a single leg A up. If you go, that's the 10-minute chart, is already an E. But if you go to the shorter term, like, let me just see if I can go right here. The 5-minute went from a lower low. So this becomes an A, and you've broken the key support level. So the next is 2267 is going to be very important. It's a 2268.25. So we're going to be watching that. So the levels to watch today are 2265 to 2261 as key support levels. And on the upside, a break above the 2271 to 2273 level would be very, very positive. I'm not sure if it can do it just yet. We'll see what happens. All right, let's back to our story. So the TBT, the ultra short Lehman 20-year Treasury bond ETF, has spiked above the down channel, Chapman wave inside track, and the falling axe formation. But that's just the start. You can't say that, oh, breakout, breakout. I never use these trend lines as something serious until it proves itself. This is just a hint that it's breaking some pretty important resistance. But you need to see it go higher. Then you need to see it pull back and turn these two lines, the green and the purple, the dashed line, into support levels, and then maybe make a C or start to tackle this very ugly candle of the 3rd of January, 41.44, 40.25 are the parameters. That's really the way I like to look at it. Then the MACD, which is now at 0.03% in the histogram, could start to turn positive, and that's going to be very important. But that's the MACD. The stochastic is very good. The on-balance volume is very good. But at 37%, that's just the start of a move to the upside. So this is all very early. But what it's suggesting to me is that when I'm looking at the yields, and if I want to go to the TNX, because that was a question about the 10-year Treasury note interest rate, that has broken. Remember, we spoke about this yesterday. This did break that resistance, and this is a brand new leg A, and I'm going to call it, in this particular instance, because it made a peak E in the daily chart, I'm going to call it for now, it should be a gray B, but I'm going to call it a blue B, because the stochastic has run to 39%. MACD's very much like the TBT, but it is actually stronger in its own way, and it's this trend line. Now, let me draw another trend line to say, no, I'm going to always make it gray. I have to make it gray because I can't be emotional about it. That's just the way the technicals work. Now, what's really important, I'm going to take that trend line high and that trend line high. Usually I go to the body of the candle right there. And that tells me that this is a nice move up, because yesterday's candle touched it, broke above, we're close right on the line. I'm being very strict here. I'm using the outside wicks of the candle and then the body of that candle right there, because that's the most visually perfect area to hit. And that's the candle of the 28th of December, 2563. So now the rate is at 2.506. Well, that is in the high range. Look at the monthly chart. That is, you see that blue line, that pink line that I said, hey, we've been here many times before. Let me open this up. Very important. Look at this. This just goes back. We were there in 2009. In fact, we're exactly in an area where we're back in 2009. Nothing big deal here. But the monthly chart shows you the inside track, major repellent zone. If the 10-year goes above 3 at any point in the next 3 months, that's going to be a major trend change in terms of my Japanization of our bond yields. At this particular point, it's just an expression because we've had such a big change on a percentage basis, but it's nothing to the change that we had back in July of 2012 into the high of, say, January of 2014. Look at that. You went from a level of 13.94 to 30.36. I mean, that's more than a double. I'm sorry. That is more than, yep, it's about 53%. Big, oh, what am I talking about? Double. It's 105%. That's a big move. Treasury note yield, interest rate yield. Okay, enough with that. So this is a very important moment for yields, and that might be the issue when it comes to HGX. Look at this, housing sector just stuck, hasn't been able to break out, not breaking down because it's the dearth of houses to sell is really the issue. But actually, look what's happening here. See, there's the falling axis, a successful almost a one-to-one to the upside. Now it's just going sideways. That's the HGX Philadelphia Housing Sector Index. Moving up a little bit today, up 1.58, nice at 241.95, but not a big deal. It'll be a big deal if it goes to 246 or higher. That means it's overcoming any interest rate implications. Now, the question is, Yeah, talk about the first little quarterly charts. Yeah, I don't have the quarterly charts. I'm going to try to get them. I have it all set up. I'm going to try to be able to do something with them next week. Now, let me do this. Here's a question. I actually put on the inaugural just so that I could see it, but here's the question. Let me move this away. Okay, let's go right from the beginning. So the 10-year note, I just did the 10-year note. The next question was GE, UTX, and Triple M and XLI. So GE right now, whoa, big move down $1.87, 1.87%, down 58 cents at 30.63, right between the 200 period SMA smooth moving average and the 200 period exponential moving average. Doesn't look good. And this says to me, wow, is this going to be independent of the market? Because usually GE is a very good harbinger. Look at IBM. IBM also down sharply. Yeah, last night it was down 3 or 4 points. Now it's up 2.89 at 169.70. Nice. Congratulations, IBM. I'm thrilled that you did that because I need you in my Dow quartet to be acting very well. And it is. It's acting pretty darn nicely. Recovery high. This is a 1.5 year recovery high at 169.73. Triple M is acting okay, so 178.60, down 8 cents. I like this peak C1, C2, C3, 180.06 back in December, early December, then 180 round number high, peak C2, that was January the 3rd, and then yesterday it went 179.80. I think from the way that this is acting with the downtrend line, that there's a good chance that it could move higher. And if it does that, it should be just a hop, skip, and a jump before it takes out 181 resistance and then 182.77. Break above that starts not just a leg D in the daily, but an alternate count. And most importantly, the weekly chart really kicks in. And that becomes brand new leg C to the upside. So we'll see what happens here. And the monthly chart is right there, knocking at the door of that resistance. And the last one is UTX, just stuck. And that is, for me, it's an important market tell. And it's just saying right now, I'm kind of stuck. I've had my move. I just need a breather. I need time out. What was it, XLI? Did I do XLI last night? No, I didn't. I didn't finish it. So the monthly chart is in leg C. The XLI is, in fact, the S&P Select Industrial Spider ETF, F/A, and the weekly, everything about it suggests that it should go to a leg B above 64.07. It's at 63.31, down 12 cents. Now, that's interesting, isn't it? So it's A, B, it's at peak C underneath the previous high. I'll be back. We'll talk about it. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I was wondering why the XLI, the S&P Select Industrial Spider Fund, was acting so poorly, down 11 cents when the Dow's up 99, S&P's up 10. And then I looked, it's got General Electric, 3M, Honeywell, Union Pacific, United Technologies, Boeing, United Parcel Service, Lockheed Martin, Caterpillar, General Dynamics, Raytheon, Federal Express, Illinois Toolworks, Eaton Corp, Emerson Electric, Cummins. It just goes right through anything that's kind of industrial. United Continental Holdings, Stanley Black Decker, SWK. So that's really the reason. Okay, I knew there was something weird there. Now, what's important is that because of this is a greater mix. It's a greater number. It's not 30 stocks. And of course, out of the 30 stocks, you've only got a few industrials really in the Dow Industrials. So what we're looking at here is that there's a retest, and this could fail. And I'm going to be watching it real closely because this is the big picture. So I thank you for pointing it out. The XLI not as successful as the actual Dow itself. Other thing I want to, so I got an email last night, and I just want to follow up. We really spend a lot, all of us here at TFNN, and all the hosts, I'm led by Tom O'Brien. Tom is doing a webinar in next Thursday night, I believe it is. Should be a fabulous webinar based on on gold, on how you can trade those three times longs and shorts. But most importantly, we do try our very best to make it educational. And I got an email last night. Dear Basil, I want to thank you and Scott from Safety Harbor for helping me get the returns in my trading accounts and the photos. I work at an aerospace company full-time, approximately 55 hours a week, and it's hard to learn and trade. I have your CD and still learning, and have been trading a lot of the stocks that you and Scott told us about, and have been trading the way he talks about to get these gains. I get into a trade and grab my profits quick. Can you please forward this to Scott in Safety Harbor? I would personally like to thank him, and thank you for having great listeners like Scott and Ben from Tallahassee, Florida. You and your loyal listener, and he gives me his name. I should have asked him permission to write about. I won't mention his name until he gives me permission to do it. So I wanted to mention that, and he showed me the returns are absolutely fabulous. Congratulations! I love that. I think all of us here at TFNN just love it when you can take some information that you glean from TFNN, Tiger Financial News Network, and use it to your benefit. That is the most rewarding thing that I think we can do. Another question here. So let's go to the questions. So I did the GE, etc. And here's one. What Bank of America? So I'm a little concerned here. Bank of America is doing nicely today. It's up 36 cents. I don't think it's I would not consider shorting. Remember, I mentioned that yesterday. I thought I'd look at FAZ a few days ago thinking, what a great trade. And then I thought, what a great trade. You want to be buying these financials on strong dips. So high-level consolidation in Bank of America. One of the best looking of the bank stocks. They've kind of done everything right after doing everything wrong. So that's a good sign. What was the question? So that's Bank of America. Let me see. Oh, J.P. Morgan right there. JPM. Okay. So I'm going to go to this. So J.P. Morgan is not acting all that well because it got clonked on the head the other day because it pulled back, but that weekly chart is still good. Let's go to Oliver in Spokane, Washington. Oliver, how are you?
I'm good. How are you, Basil?
Very well, thank you.
Thanks for having me.
My pleasure. You'd like to look at?
I'd like to look at APC, Anadarko. I know that you think oil is kind of moving in sideways consolidation, but just kind of looking at the long opportunity on APC.
So I've just done a real quick weekly study in the Chapman wave. I'll just do it real quickly in the monthly, and then I can be much clearer about it. So now APC is Anadarko Petroleum. What's really interesting is the next email I was going to go to asked me about Noble Corp. Now they might be slightly different areas within the oil sector, but let me just show you something very interesting. You see the way now, do you have a position on APC, or is this just something you're intrigued at because it's acted so well so far?
Yeah, just looking for an entry if it continues to move higher.
Okay. So it's had a high-level consolidation. It's gone sideways. The pattern that we've seen has been generating sideways moves. The whole market has been doing this since mid-December. Anadarko APC trading at 70.48, up 30 cents is exactly the same. What's really important is that sometimes as the MACD, the moving average convergence divergence, pulls back, the sideways range is just saying, this is ironically enough for the fuel, it's a refueling stop. And if you look at the 9-period moving average in the weekly chart at 69.14, climbing and within a fraction of crossing the 200-period moving average, I do not use moving average crossovers in the traditional way. Of course, I wouldn't do it in the traditional way because most of the time I've had to investigate all of these things by myself and come to my own conclusions. And my conclusion is that when they finally cross, that is the period where you're starting to get not a trend change per se, but you're starting to get into a digestive phase. So this is what I'm looking at here. The 200-period moving average in the weekly chart could be very strong support, but it could also be very strong resistance if the price pulls back. So that means it could bounce around you for a while. If you don't mind, I know you didn't ask about it, but I'm going to do this as well. NE, which is Noble Corp, has a slightly different chart formation. It's made the cup formation. So its consolidation after its big move up to 8.37. Now we're talking a 10 times difference in price, but I'm just talking chart patterns here. This one, because of today's action, says that if Noble NE is able to climb and push above 7.80, there's a real good chance it's got a left side, right side price time match. They could take it over the next week or so to the high that was made at 8.37 back on the 12th. I can't quite do the same thing with your APC because of the pattern that's formed. It's a high-level consolidation, and this can continue for a while. So how can I put it? We've seen enough charts that make lower lows and slightly lower highs, all within a channel, down channel, very gentle down channel. But then suddenly it takes out the left side low. We saw that. Here's a good example, GE because of earnings. Another one, there were so many that are almost, even the Dow Diamonds. Let me see if I can, not quite, but it's almost the same thing. So here's my big frustration. I need to look at the weekly chart, and I need to say to you that the way the monthly and the weekly charts are acting, I could see APC pulling back a little bit. I can see it actually hitting the 68s. It's not a big deal, 2.5%, but it depends on what the plan is. So if your plan is shorter term, I have to say, Oliver, I just have to step aside and say to you, until it really breaks out, I'd rather buy strength above 72.32, and then you're getting into an area there's resistance slightly above that. I would rather wait on the stock. It's just not got the pattern that I can say to you with conviction that you haven't got a 5% risk, and you are trying to get a 5% gain or a 7% gain. I don't think it's equal. What I would say to you is, because the monthly, looking out at the weekly and the monthly charts, because they are improving so much, I would be prepared to start a small position. So if that's something you're interested in, you want to hold on, let me go through in my mind exactly how I can set it up for you. Is that something you want to do?
Sure.
Okay, so we'll talk about how I would set it up with a chance that it's a stock that's consolidating and will break to the upside. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So let me just do this. We're on with Oliver in Spokane, Washington. APC is the stock we're looking at, and Anadarko Petroleum. I've got here on this chart here. I wonder if I can see it correctly. Can I see it? Okay, I can't see it. Well, I wanted to see it and I can't, but you can. And what it shows is within the Chapman wave methodology, I've got support and resistance levels. And 69.40 to 68, even 67, 66 are the support levels. And then there are a number of resistance levels at 71.39 and 72.97 and 73.13. So I think it's just stuck in the range. So the only thing I'm going to suggest to you is at 70.41 up only 23 cents. If you wanted to buy just a very small, like 20 shares or 10 shares, just to get a real feel for it, and then maybe let's talk again next week, Tuesday or Wednesday, if you're able to call. I'd like to see what it does, because I'm going to make it real simple. I would increase my position if APC went above 72, let's call it 72.30. In other words, if it went Wow, 2 points higher. Yeah, I'd have to have patience. I want to buy strength, and I don't want to add to it on weakness. That's the only way I can do it. I'd nibble it. If you really want to get a feel for it, personally, I would wait. I'd wait a day. I'd look at it next week. Probably Tuesday or Wednesday, it's going to tell you whether it's a buy or whether it's just a step aside. I can't do anything other than say I'd nibble on it here if I want to get a feel for the stock, and that's about the best I can do. Looking out, I've got the same kind of, I need strength now to be able to say that I want to buy it. So I'd be adding to it if I nibbled on it now. I'd add to it at the 71.80 to 72.10 level. I'd say I'd add a little bit. I hope that helps you.
Yeah, it does. Thank you. Yeah, I guess I was just looking, to buy at the break above resistance. But yeah, not sure to buy before. So
yeah, exactly. I'd rather be looking at strength rather than weakness. Say, let's talk again. Let's keep it on your mind. If you want, we can talk in about 3-4 days' time.
That's great. Thank you, Basil. I appreciate it.
Thank you very much for calling. I always appreciate that. Oliver in Spokane. So we're looking at B Cove. I had a question from Stephen. He wanted to know about hi, Basil. As always, love the show. Could you look at Bright Cove BCOV? They are an internet video marketing service, I think. There's Stephen. So, Steve, this is what I'm looking at. This is almost the same situation, but it's a different chart pattern altogether. It's trading at $7.70. I like this little pop-up today. It's part of the Chapman Wave arch formation. Took out the left side low, but it did close below it. I need the technicals to confirm at 770. What I am going to suggest to you is I'd rather wait a day, and I'd rather nibble on it at 785 than to do anything right now, because the weekly chart is still weak. So hold off. I'm going to put it on my list. I'll put it in my notebook. I'll look at it again on Monday. I'm just going to say right now it's just a little too difficult, because there's just you're actually taking a big chance, because it's made the arch formation, and both the daily and the weekly technicals are not good enough yet. So I'll keep it on the list, but I'm going to say B Cove, be careful right now. So here we go. So folks, just the inauguration, another couple of minutes, and we're going to be having the inauguration of a new president. Let's see what happens. Dow's up 95. I'm going to make it real easy. You've got your swimming lesson coming up with Kevin, and you've got great programming coming up. I'm just going to say to you, I've got a signal that says on Monday there should be a little bit of weakness in the Dow. I don't know if it'll work, but that's what it says. And we will know by Tuesday or Wednesday of next week which sectors are being favored, which sectors are not being favored, and whether or not there's a sustainability to any breakout. And I'm going to make it real simple. The close in the 20,000 level opens up new vistas, at least in the month of January and February. So let's see what happens. In the meantime, key support in the Dow is at 19,650. I'll be back on Monday. Have a great day. Check out my opening call. I think you'll find it interesting and hopefully rewarding.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.